It is the third largest hotel chain in India, and they mainly cater to the economy segment and the lower middle class segment, and they have ranges across mid upper medium as well. In 2020 during COVID, they ventured into the luxury, not luxury per se, but the upper upscale segment, through its brand called Aureka. And their first hotel was in Udaipur, right? Me and Chaitanya were just sitting and just looking around their properties. We saw Aureka Udaipur has decent reviews on its site. So
let's go and check next time.
चलो भाई, बारिश का टाइम, उदयपुर कॉलिंग.
Hi guys, we are back this week and with another chemical company.
अरे बंद कर भाई, केमिकल तक गया मैं. Hi guys.
This week we have also, I think, got bored of chemicals. Pharma and all this. So we thought let's take a trip
and go out to eat.
नहीं भाई, trip, travel, tourism.
खाना नहीं खाता बाहर जाने के बाद.
But what we are talking about, sure. So we are talking about a hotels company, as my friend couldn't guess, but I hope you guys could have, because thumbnail देख के आए होंगे ना. वैसे तो click किया नहीं होगा. So we're gonna talk about Lemon Tree Hotels. So what is different, what's going on with the company, and I think the recent fall also, which I think it's justified or not, we're gonna explore it, and whether you can have a taste of this lemon or not in your portfolio.
Yes, I was waiting only for a typical
now I have to
Chaitanya
make
joke.
it because of you. You're waiting it, na? That's why. But I think the Lemon Tree's journey has been very exciting. The stock has gone almost 10x since the COVID law. I think it was 14 rupee stock.
एक नींबू जितना.
This kind of stocks are particularly famous in retailers, which are below 20 rupees. But I think currently it is trading around, of course, 120. But I think it has touched an all-time high of 150 or so. So almost 10x. But this particular couple of issues that the company is facing with, mostly concerned with the debt and the return ratio. I think the company's debt to equity and ROC, which are, I think, one of the great metrics to gauge an hotel company, they are, I think, subdued compared to their peers. But I think there are some strategies that the company is trying. They have this vision for the next 4-5 years that they're going to achieve XYZ metrics in different areas of their operating spectrum. So I think we're going to talk about this. But before that, I think we're going to give a quick on what's Lemon Tree and how, what is it?
Cool. So I think then Lemon Tree, as Chaitanya, already told you guys briefly about, it is the third largest hotel chain in India.
I think after Indian Hotels and EIH, which is Oberoi, right? Yeah.
हाँ, कह सकते हैं या. हाँ, Oberoi है, ताज नहीं है. Yeah. So third largest hotel chain, and they mainly cater to the economy segment and the lower middle class segment, and they have ranges across mid upper medium as well. And I think recently in 2020 during COVID, they ventured into the luxury, not luxury per se, but the upper upscale segment, through its brand called Aureka. And their first hotel was in Udaipur, right? So Aureka Udaipur. And I think me and Chaitanya were just sitting and just looking around their properties. So we saw Aureka Udaipur has decent reviews on its site. So
let's go and check next time.
चलो भाई, बारिश का टाइम, उदयपुर कॉलिंग.
But I think before as you mentioned, 2020 is when they ventured into the premium segment. Before it, they were primarily only economy and premium, mid-scale segment, which I think that's what distinguishes them from other players. Where other players, they have this some metric called ARR, which is average revenue room in hotels industry. How much per
room, what revenue does the company generate?
Correct. So that the companies operating in economy segment is pretty evident from their ARR numbers, where industry giants such as Indian Hotels and EIH, when you talked about, they hover around 10,000, 11,000. Even
EIH, I think, will be above
yes, because,
15,000 also.
Because most of their properties are in 5-star, 7-star. That's why they are around 18,000. But for the same metric for Lemon Tree is around only 6,000. So that tells a lot about the company's position in the economy segment. And I think that is what is, I think, has been problem with the company, because when setting up an asset, of course, asset is not going to ask you whether you want to use it for premium or economy. So asset investment remains the same, but how much you're able to generate. So if it's the economy, so of course you're going to generate a lower compared to the premium. And that's why the return ratio and the return ratio primarily is, I think, around 11% for the company.
And what's the industry average?
Industry average is around 15 to 20% somehow. So lowest is 15, of course, lowest is Lemon Tree, but below, above it, 15 is the lowest.
Fair enough. And then also I have this one question. So, in hotels, basically, there are two ways, two primary ways of, owning a hotel. So, first is direct ownership, like you build the hotel, you own it under your own brand name and stuff. And then the second is the managed way, that property already hai, you sign a deal with the property owner and then manage it under your brand name. So, uske baare mein, if you could just give us some picture,
because it's interesting that you dropped that point, because recently what has happened in last few years, due to the asset-heavy nature of the hotels industry, like you have to own it and then you have to construct it, and it's a long gestation.
Regular maintenance also.
That is the different part. But before even that, even just owning, because location hunting is also very good. Because whenever you go traveling, you always go up for good locations. So this recent trend has been going on in the industry. Recent as in not that recent. I think in last decade or so, it has been picked up. So what companies do is they try to leverage their brand name. For example, let's just take Taj maybe. So Taj, of course, they're not gonna do it with Taj, but just for an example, Taj is a very, very reputed brand. Everyone basically knows it. So if I have a property in, let's say, a prime location in city like Udaipur, so I either as a Taj I can own a different property which might not be as lucrative as the mine property, and may take a time to build and operate. So what Taj and I can come in an agreement is, I'm going to give you my property, so you don't have to invest that much. It's already ready. You can of course change it according to your standards and all those premium, whatever the feature you're going to give me, and you're going to charge me a royalty fee. Now that fee can vary from 3% to 20% depending on what the brand is bringing in the table.
20%?
Yeah. Sometimes it happens because of course, if I'm going to run a company by my name, no one's going to come. And if I just put a Taj there. Yeah, but you know me, na? Other people don't know me. So that is very, very flexible. So that is called managed property. And the other is a traditional model where you build it, own it, everything. That's called owned property. So I think for industry leader with these Indian hotels, that is around 50-50. So 50% of their property is owned, 50% is managed. But,
what about Lemon Tree?
Yeah, but this ratio varies across, as we talked about EIH, right? So they are primarily, they have only 30 to 32 hotels across India. So they are very focused on the premium segment. They are, some hotels are even 7-star for them. So in most of the premium segment, this is not a very viable, because you have to depend a lot on the person who's owning the place. So then in that case, EIH has 93% of owned property and only 7% are managed. But for Lemon Tree, it is currently 40% managed and 60% owned, which I think they're gonna change it to the level we're gonna discuss for the betterment of the ratios that we discussed about.
So so basically you're saying that Abhi Lemon Tree is 60% ownership, 40% is managed. And you just talked about what are the issues going on with this particular strategy of owning majority of ownership and the rest for managed. So what are the plans of the company, going forward? कि भाई हम लोग उसको कैसे चेंज करेंगे?
First of all, let's just clear out the problems that the
हाँ.
company is facing. Two major problems. Debt to equity company has around 1.9 times, industry has 0.3x, and ROC as we mentioned. So why it happened? Because as you mentioned, companies focus on economy segment, so that has hurt them, and also basically the return ratio implied with the lower return and then increasing debt. So yeah, good question. What company is doing to address that?
But then why is Lemon Tree's debt to equity high when compared with the industry average?
Exactly.
Yeah.
So first of all, as I said, the company per room is generating around 6,000, where the industry is around 10,000 per. So that is almost 40 to 50% of less earning, right? So when your asset investment is remain same, but your earnings as per room decrease by 40%, that's of course gonna hurt you somewhere, right? So that has come at the expansion of the debt, and the company has been very aggressive over the past few years. But to address that issue, I think company has done, as you mentioned, Orica started in 2020. So company is trying to move up the value chain. They're trying to open up a more premium hotels so that ARR metric, as we talked about, it can climb to a better number, or
at least they'll start bridging the gap which they have with their peers.
Yeah. And also at the same time, the asset owned versus managed that we talked about. Currently it is what, 60-40, 60 owned, 40 managed. They're gonna flip it to 30-70. So 30 owned and 70. So I think most of the pipeline, it consists most of I think almost 100% is owned, managed ones.
So then basically we can also attribute this particular expansion, massive expansion, which the company is undergoing currently, to the increase in debt as well. Because, and I think also the company, as you mentioned that they're moving up the value chain, so I had just had this random fact in my mind that they're also renovating their Keys profile. So they have this new brand called Keys Hotels in their portfolio, and which is caters to the economy segment.
Yeah,
so they started renovating it now. So basically,
even a slight renovation, giving it a slight premium look, can fetch up a good.
That will start increasing the ARR for that particular portfolio, and as they are in economy, so uska contribution to अच्छा खासा है ही.
Correct.
So then that can also help.
So the two big steps that the company is taking. First is moving up the value chain by Orica, and second is switching to an asset-light model from 60-40 to 30-70. Right. Now, where the benefit is also there of the economy segment, it's not like that's all bad thing. Otherwise, they would have in business with that only. So economy segment also come up with lower cost, because you might remember staying in a hotel which costs around 1,000 a night and staying in a hotel which costs around 10,000 a night.
Yeah.
So it's not only that the price is higher, but the accommodations are also higher in the premium segment. So that also comes up with the cost. But fortunately for Lemon Tree, that has not been the case because of the higher presence in economy segment. And that's why they boast industry-leading margin of 50% EBITDA margins. So, and I think industry average is around 40-45% ranges. So that has been the good thing. But I think going forward, they're trying to replicate the same model into their Orica as well.
I was just going to say that, because
so that they also don't suffer with that problem.
So I read this management interview when I was researching about the company. कि Orica में what was the basic idea of Orica is that जो मिडिल क्लास ट्रैवलर्स होते हैं इंडिया के, तो उनका भी एस्पिरेशन रहता है कि मैं भी एक थोड़ा लग्जरी प्रॉपर्टी में रहूं या कुछ रहूं. So what the without spending that much. So what the owner did was, he made a list of all the amenities which the luxury hotel providers provide to their clients, and then उसमें से he realized there are a lot of unnecessary things which they are providing. मतलब काम ही नहीं है उसका, यार clients use ही नहीं करते. तो he just removed all those amenities from his hotel or his property, and then फिर उसने कॉस्टिंग निकाला और का, तो आई थिंक 20 से 25% का वो सेव करा था इन द लग्जरी सेगमेंट as compared to his competitors.
And currently, the company's Orica portfolio, it has an ARR of around 11,000. So that is almost 2x of the company's consolidated ARR. So company is looking at that. Of course, company Orica operates around 42% utilization currently. Utilization as in occupancy rate for the hotel, because of the new hotel that they came up with.
But that is also very skewed data, because उनका नया hotel
just October last year they
October,
opened,
and I
India's
think
biggest actually hotels, 670
from
rooms
number
are-
of rooms, na, as per number of
yeah,
rooms.
in terms of number of rooms. So that
Yeah.
it was in Mumbai, I think Sky City, Aurika Sky City.
Aurika
Yeah,
Sky
yeah.
City.
So because of that, currently occupancy looks not so great. But I think going forward, that is also, and also the Aurika brand has EBITDA of around 55 to 60%. That is already higher than the company's existing. So if they manage to continue this
And get proper
yeah,
utilization
so,
over
yeah.
there.
So going forward, EBITDA can also climb up from 50 to maybe 50 to 53%. Yeah.
Got it.
But I think one particular reason which has corrected in the recent, I think the stock has corrected from the levels of 150 to around 120. So that was because of the Q1 result. So I think it's better that we discuss as well because the company's EBITDA came at around 43%. So
that's a huge difference,
Huge difference from FY24's 50%, 49-50% to 43%. And that was due to this one you mentioned, the renovation. So whenever the renovation happens, of course, you can't give it to the clients. So that complete revenue goes to zero, and renovation comes at a cost. So revenue cost increasing, utilization going at a toss, and Aurika is still stabilizing. It's not completely stable. So cost associated with that as well without generating revenue. And company is also doing some digitalization strategy according to them, which they're gonna use it to enhance the customer experience. So I think all costs are associated with this. But I think these are more temporary issues. Of course, innovation can't go on forever. So once those innovation will be over and the quality of room will be improved, it will start also generating higher IRR, at least in theory. That's how it should be. So whether the company can able to replicate this or not, I think that is the one thing that.
Yeah, and then basically this particular dip which happened might be an opportunity for people.
Good that you mentioned.
Yeah.
Because company was already trading at around 18 times its 1 year forward EV EBITDA.
And what are the peers trading at?
Interesting. Because Indian hotel, market leader, of course, they were trading around 30 to 32 times. Industry at average trades around 25. And Lemon already, I think 18 times. With this fall, it might have even come lower. So with company's issue, I think solving, if it works out for good for the company. So there is this re-rating potential as well. So company's valuation can climb up to maybe let's say 25, which is
just take the industry average. If they execute the plans, whatever the company has been saying.
Yeah. But this, of course, it's not going to be easy.
Yeah.
Because it's a very long-term thing. And for that to happen, currently the hotel industry is going through a very good tailwinds. So that needs to be continued because if any adverse effect happens to the whole industry, then all plans go for a toss.
But then I think this particular tailwind is here to stay, for at least the next 2 years. Because I was just going through some data and it showed that, the demand for hotels has been greater than the supply. And whenever this is the case, you'll always see all the hotel stocks doing very good. And you will see decent run-ups.
Yeah. And hotel cycle are also known for its long-term cycle.
Yeah, so
not
I
a
think
couple of years or 5 years.
4, 5,
exactly.
5 is minimum, but then you particularly see at least a cycle playing out in those 5 years.
So companies, I think, well positioned that way, and that's why, of course, the management is also taking those quick decisions to do all the addition and all this. So I think one has to keep this stock into their watch list to see if what happens and whether the current stock dip is an opportunity or because we can't say.
It's up to you to decide.
It is just educational or entertainment.
Yeah,
it's not a recommendation. But I hope you learn a thing or two about the company so that it can be easier for you to from next time to evaluate a company or any business for that matter. So I think that pretty much sums up what. So I hope you grab your lemonade while watching the video. And I think that's it for this time. Next time we'll hope to come up with new interesting company. Hopefully not chemical or pharma again.
And if you guys have any suggestions, please comment below. So it makes our work also easy.
Yeah, that also works. Yeah. So that's it.
That's it.
Yeah. Bye.
Bye.
Like, share, subscribe, and see you in the next one. Bye.
See you in the next one.